Welcome back to the Property Frontline Market Watch series. I'm here again with data magician Scott Hochgesang. Hi, Scott.
Hello, everyone.
Hi. Okay, so in this episode, we'll be reviewing the sales price data up until the 30th of September 2025. We'll do as we always do and cover off the three main data centers that we trust. So Cotality, SQM, and PropTrack. And also every episode we do an in focus series or a closer look at a particular part of the market. And this month we're looking at that age-old dilemma of buying in the regionals versus the capitals. So let's get started. So as I mentioned, we normally review the data from the three main data centers or sources of Cotality, PropTrack, and SQM. And so Scott, can you take us through our combined chart here for Sydney, Melbourne, Brisbane, and Adelaide?
Sure. Thank you very much, Debra. Running through the house price growth stats for September, we've got Sydney up a whopping 0.9% on the Cotality numbers. PropTrack was slightly lower at 0.6%. And the SQM asking price data, very aggressive 1.6%. I think that's for the month ending October 6th, right, Debra?
Yes.
Yes. Down to Melbourne, we're at 0.5% growth from Cotality and PropTrack. They're both running about the same amount, and SQM a minor backtrack, interestingly, minus 0.1%. Brisbane up 1.1%. Cotality, PropTrack quite a bit lower at 0.3%. That's interesting. Brisbane feeling very strong to most of us at the moment.
Yeah,
SQM's number was up 1.4%. Almost overheated, right, Debra? Call it our red hot market. And Adelaide up 0.9% with Cotality, 0.6% PropTrack, and SQM about the same, 0.9%. We're going to switch back over to Debra to take us through the next four.
Okay, thanks, Scott. So for Perth, Cotality has Perth price performance in houses up by 1.6%. We will explain that a little bit later on. And PropTrack, late to the game, they say that prices only have increased by 0.5%, and SQM has asking prices, so forward-looking prices, going down by 1.2%. Anyway, so Hobart, Cotality has no change. PropTrack up by 0.9%, and SQM asking prices up by 0.8%. Darwin, still a star. Cotality has prices up by 2%. PropTrack up by 0.3%, and SQM, and this is where I expect the data to start going, is asking prices down by 0.8%. And then in Canberra, like that. Anyway, Canberra, we've got Cotality saying that sales prices were up by 0.9%, PropTrack up by 0.7%, but SQM has asking prices up by 3.1%. So don't know if there's a glitch in the little AI tracker, but or maybe because it's such a small market that they've just got some more expensive houses on the market, so the asking prices data is bounced. That's why you're always going to be careful of just looking at the data. Anyway, and nationally, Cotality says house prices are up by 0.9%, PropTrack up by 0.5%, and forward-looking house price asking prices up by 0.5%. So interesting mix.
Pretty good month across the board, yes.
Yeah. All right. So this chart is something that we track in the Property Frontline, and it shows house price changes month by month. And I prefer to see data in a graph because it makes more sense to me. And so what have we got here? So here's the star performer, still Darwin house prices though. And then this is what I would start to expect to see. And you can see Brisbane just starting to peek its head up above, up above Adelaide and Perth performance. So Brisbane, Adelaide, Perth, they were, as you can see, like this is the Brisbane, Adelaide, Perth data, and they were really leading the charge for 18 months or something. Now they're starting to come back to the data points and changes of the other capital cities, but it looks like they're might be on a little bit more of a spurt. So
I think we'll see Perth and Brisbane, the gap sort of starting to grow between those two and Adelaide. We've been expecting it for a while. It just feels like we may now finally see some breakup of what we'll call the bat markets with more heat in Queensland and WA.
Yeah, I agree. And what we're seeing, so on the front line, so we tend to mostly buy existing homes, and we are just seeing absolute crazy market activity, particularly in that Gold Coast market. It just feels almost like another COVID. That's my reference for like really, really fast markets. But then right across the board at that price point of, say, between 600 and 1 million, it's very fast. So property comes on the market and then it's pretty much you've got to see it and make your offer within a few days to make sure that you're getting the properties that you want. But so if you're in that market or in that price band, just make sure that you have all of your details in place, got your finance in place, and you're ready to go. Okay, so okay, Scott, can you take us through this slide, which is the rental market overview?
Sure. These are Cotality stats for annual changes in rents, broken out between houses and units. On the houses side, you can really see that spurt in rents up in Darwin. So there obviously has been a lot of activity up there. Some new jobs growth, obviously a lot of investors heading up that way to get into that market. Strong rental growth still in Hobart and Perth and Brisbane, I see. And Melbourne, really below inflation. That's something kind of taking a look at, as many people are now starting to target Melbourne as being at its bottom or kind of on its turnaround. It's going to have to be supported by rents for that to continue. Over on the unit side of things, very large increases in rents for, again, Darwin, but Perth, Hobart, and Brisbane. So traditionally, unit rents have not grown as fast as houses, and I believe a lot of that is just due to people getting priced out of being able to get houses in these markets and having to have to look at a unit now. Supply issues, not a lot of new supply coming onto the market. And again, we've got Melbourne running at a very low 1.8% on the rental growth number. I mean, it's a big city, and as I think you said earlier, Debra, there are going to be pockets in Melbourne where we're still seeing very good rental growth. But as a whole, it's a bit of a warning flag there, something I'm keeping my eye on. I think the vacancy rate for the entire country was 1.4%, which is just absolutely crazy low. And we feel out there for all the renters who are doing it tough, let me tell you.
Yeah, it is tricky. But, yeah, like that. So if you're an investor, You've just got to be selective about the pockets where you can get good rental return. And that's where good advice comes in. Are we finished with this slide?
Yeah, I think so.
Okay. Right. So now we're on to one of my favourite segments, which is Mentionable News. So this is news that's happened since the last episode of Market Watch, and we track main things that might influence the market, even for maybe a week or so, or something that's going to impact the market moving forward. So the first point is we're now a couple of weeks into the active use of the new federal government home guarantee 5% deposit option and the increase in purchase caps. So there has been a little bit of adjustment, but like Scott and I were saying in prep for this segment, the buyer pressure, it doesn't feel like the people who can qualify for this scheme are actually really active in the market. It's just the agents are just really hyping, oh, there's this change. And so people are anticipating that they're going to have to pay a lot more for their property at certain price points. So, yeah, just be wary of that. So the last RBA announcement was the 30th, I think, of the 30th of September, and there was no change. And of course, the next one is on the 4th of November. What are you hearing, Scott, about a price increase, nothing, or a decrease?
I think the latest talk out on the street is 3 of the 4 major banks are saying no more cuts this year. We still got one Westpac who's saying we might get one for Cup Day. A few people are maybe putting their hope on that, but there's been a shift backwards on expectations for future rate cuts. Inflation is sort of still here, everyone, and a bit frothy, and Trump's tariffs are sort of still out there, and our economy is actually doing pretty well in light of everything. So, well, I guess we'll just have to see. It's been so unpredictable. I don't think anybody can give us the answer at this point on if a rate cut is coming, and exactly when that will happen.
Yeah. And it does feel very nuanced, doesn't it? It's like a fresh gust of wind and, blows it off track. But anyway, and can you cover off the next point for us?
Yeah, we just wanted to highlight what we're seeing in some of the other markets. You're probably hearing a lot of this out in the media these days. We've got stock markets just surging to all-time record highs. It's not just in the US, here in Australia, around Europe. And also gold up over $4,000 an ounce. I believe that was the number. Bitcoin obviously well over 100 and just kind of going crazy too. And it just feels like many of these asset markets are very bubbly and frothy, I think we would say. I don't want to say they're in a bubble because bubbles do pop and we have big falls, but certainly we're operating up at a point that people in the industry are just raising a bit of alarm. That typically at some point in time we do get large pullbacks when these types of markets have had this sort of run up.
Yeah, and we like to keep track of this because if there is a major correction, we'll expect property prices to strengthen even more. So while there's good activity in the stock market and these other markets, that does draw investors to that side. But yeah, if there is any problems, people will tend to come back to property, flight to safety.
Yes, less volatility, definitely.
Yeah, okay. So relating back to that point where Cotality said that there was an increase in the Perth house prices, it would be directly correlated to the announcement in September by the federal government that the contract for the nuclear subbase has gone to Perth. And that is bad news for Adelaide. Adelaide doesn't have many employment opportunities as it is, but so they were counting on getting the subbase. But anyway, it's gone to Perth. but like the money that's going in there just to kick things off, just to get construction started, the federal government, along with the announcement saying, oh, it's going to Perth, they've given the Perth government $12 billion to get things started. So you can imagine what's going to happen, like all the employment, all of the manufacturing, all of the engineering. There's just going to be so much going on there, and that's just going to fuel Perth even more.
Yeah, I'd say watch out for the Americans too, because they're going to have to import quite a few of them to help teach us about these U.S. nuclear subs we're going to be building and staffing.
Yeah. Look, they couldn't have chosen a better place. I mean, it is fantastic there. Very safe harbour and easy to get to rather than having to go all the way down to Adelaide, come all the way back up. Anyway. All right. And Scott, do you want to cover off that last point?
Yeah, we just added this point to the slide actually this morning because Jim Chalmers came out yesterday, for those of you following all the super changes, and had a big walk back in these changes to super. We had new taxes coming in on super over $3 million. That's actually going to stay, but they're not going to be including the unearned capital gains anymore, which was something that has caused a lot of angst from people, in particular farmers who have put their farms into super. Some pretty big changes are going there. They did actually add one tax increase. So for people that have over 10 million in super, they're going to be hit with a 40% tax instead of this 30% tax. So they snuck that in there. But all in all, it's a loss of about $4 billion of tax revenue for the government over the next 4 years. So I suspect the media is going to quickly spin on that and turn toward where they're going to get that money from and whose pocket are they going to be looking at next. It was generally a positive on the property side, I would say, because there was concern people with these properties in their super might have to sell them because they weren't liquid and they couldn't come up with the money to pay the tax as the gains grew.
Yeah.
So, yeah.
So that was good. And they do say Paul Keating had a little bit of a chat. Anyway, let's keep going.
It's funny the way, I'll just say one thing here, the way these political announcements get made, because a couple of days ago, I heard some media announcements saying Albo had taken notice of these tax changes. It's like taken notice. I mean, he knew it's his treasurer that implemented them, but it almost was like a warning flag that there were changes coming. And within days, we had Chalmers going on air with the changes and walk back. They've got to get this through the Senate somehow. So maybe this has been what they've decided they can sell. So they've either got to get the Greens or the Liberals to vote for it, or they cannot implement a piece of legislation like this.
Yeah, it's tricky. Now we are into our special segment of In Focus. And this month we're talking about regionals versus capitals. So which is better for you? Should you start to consider the regional areas where traditionally a lot of investors wouldn't have even thought much about? All right, so let's look at the regional pros and cons. So why are we really raising this now? A lot of people are priced out of the major capitals, and that does give pause to consider a different lifestyle. And I'll just give an example. When I was growing up and I was in Sydney, and my friends and I, we felt priced out of Sydney back then. I'm not going to tell you how many years it was, but friends of mine actually moved to Moruya. So they moved out to a very regional, though high quality surfing area. And so they moved out to that place and they were able to buy acreage. And there was a lot of people who were doing that at the time. And now, of course, it's like a thriving regional area. But so that's the way capitals and countries actually expand. It's through people getting priced out or looking for a change, and they repopulate these areas. So what are the pros? Of course, there's more affordable purchase prices. You might consider regional for a lifestyle, whether as an investor or whether to live there. There's usually larger blocks, larger properties. The really attractive component is there's usually higher rental yield because there's less investors there. And there are dual use purpose options. So that is where someone might be looking at a regional area, consider it as an investment for a particular amount of time, and then they're ultimately planning to live there in retirement. That's, like there's a range of different reasons that you would consider the regions. And so, Scott, the cons?
The cons of investing in these regional markets, some of the biggest ones are just lack of key infrastructure. I'm just thinking one big one for me is major hospital.
Yeah.
As we all age, if your closest large hospital is an hour away, that's always going to present some risk for some people. A lot of these small regional centers have almost like little micro health centers.
Yeah.
And if anything serious goes wrong, you've got that long time frame to get there. A limited employment, just not that many larger companies are located in the regions. There's plenty of sort of small businesses, but not the larger high-paying jobs. You're far from friends and family, especially for those of us, in Sydney, watching people kind of move up the coast. It's a long way. You won't see them as much. Fewer amenities. Volatility. This is kind of my belief. I don't have a slide to back this up, but it just feels like there is a lot more volatility in these regional markets. And by that, I mean, you may get a growth spurt over 2 or 3 years, and everybody's talking about that out in the media. But then that market goes flat for 6, 8, 10 years, goes backwards, and we don't really hear that much about it. So we'll be talking about one example of a market there as we get toward the end of the presentation. The last thing to be aware of is, in these smaller towns and small cities, there's just a lot of land supply out on the fringe of town. A lot of stuff that can be developed. It may not have the water infrastructure in there yet, but as prices rise in these areas, all that land comes onto the market, and it really does hold back growth, I would say. So,
Yeah.
kind of a mixed bag, obviously, of the pros and cons.
Yeah, correct. Very good summary.
Thank you.
Okay, so what's the definition of a regional area? So we looked at this from a couple of different perspectives. So obviously regional, not a capital city. And the ABS actually says a regional area is based on population. So they would consider it to be kind of a centre at 30,000 in population up to 130,000. Of course, if it's a regional area, because it's not in the capital city, and it's got more people living there, well, then you would expect it would have a bit of an indicator that it has more consistency with its growth, but we'll talk about that in more detail shortly. The other point, don't get confused about remote. So regional and remote, a regional area will have this population. Remote would usually be a long way away and much smaller population.
Handful of people, almost rural, Yeah. Mostly farming, no town center.
Yeah. And so this is what Scott was alluding to before. So how to select. So when an area is developing, we'll see the price pulse. And sometimes it's like a false dawn. We'll see data go up saying, oh, sales are up, sales prices are going up, but it's because there's speculators going in and they inflate the price. It's not because there's a big demographic push or lots of babies are being born and that's, pushing the price up. So be very wary of the pulse because it can be like there'll be a growth spurt and then it'll either collapse or it'll just flatline for a very long time. So when you're considering regional areas, make sure it has more stable growth. We are seeing regional areas pop up because they might be part of an expansion of a city, which we'll give an example of soon, establishment of a new city. So that can happen too. Okay, Scott, yours.
So we've got a very interesting chart here we've gotten from the folks at ID that shows population growth across the entire country, broken out by, this is probably LGAs, but the darker blue areas show the high population growth just over the past 12 months. So this is not long-term data, it's just very recently. Orange, no growth, and red going backwards. Certainly, we're seeing most current population growth along the coasts, and we can kind of see the Perth area, Mandurah, Brisbane, down around Melbourne, down the coast. There's one large dark area, though, we wanted to point out in WA, kind of stands out, and it's always kind of a warning flag when we look at data and we try to act on it, because it's saying the population's growing in what is basically a very remote area of WA with very few people in it. So as I think Debra said earlier, if the area has 5 people in it and it gets one new person, it's grown 20%, for the year, but doesn't necessarily mean anything from an investment perspective. So all of this does need to be evaluated from absolute numbers as well. We also put climate change on here. Do you want to say anything about that, Debra? I know that's on your roster of things you're checking on many properties.
Yeah. So we want to mention climate change because Australians do typically hug the coastal area, but we are starting to see a consideration of where to buy. And if it is by the coast, we would typically want to make sure it's in an elevated area. And of course, the insurers are starting to become very, very conservative with approving insurance if it's in an area that's just literally going to get swamped by, might be eaten by the sea in the next few years. So just when you're choosing an area, be mindful of that.
Yeah, it may seem very far out, with a lot of the climate change and a very low chance of it happening. But if you cannot get insurance for a property, good luck getting a bank loan. Yeah. And as we head into situations where people cannot borrow to buy in these coastal areas, the number of buyers that you're going to be facing when you go to sell is just going to be dropping, because they're going to be cash only ones who are willing to take the risk.
We've got the information. Use the information to make good choices. Don't be silly, because it's a lot of money to spend. Okay, so if we can't use really good sales information and we can't only use population, what do we use? So first off, we do use that information, but we put it into our basket of choice. So the number one thing that I look for when I'm selecting a regional area is really the PRAM index. So I want good population increase, but it has to be for the right reasons. I don't want to buy in retiree country. I'm just not buying there. It's not going to be good for an investment choice, because you need diversity in the demographics for good capital growth. So the PRAM index, we also want multiple major employment providers and a mix of industry. I always think that message is old, don't only rely on a mining area, but I have to say it all day, every day, because there's people who still haven't got that message. And so we don't want to have to rely just on one industry or one employer, because if something happens to that industry, boom, there goes all the people, all the support, the support employment. and all the population has to go. I do want to buy in an area that is what I would call a satellite of an expanding city. So we've got some examples. We'll talk about them shortly. But when a city expands, the way they'll do it is, the way the government does it, is they'll like put out like a big octopus arm. And so they'll start to develop an area that might be, say, 40, 50 kilometres from the major centre. And then the government has to put in all the infrastructure like sewage and water and, power, so that then the developers can go in and build the houses. But then what happens, these sort of satellite areas reach a point of interest, and then the areas in between start to fill in. And so I like to buy in between. And all right, so the other thing to look for, really good indicator, is government investment in infrastructure, so hospitals and schools. And I think I've just stolen a couple of Scott's points, but I'll just keep going. So the other one that I like to talk about is McDonald's versus Bunnings versus Starbucks. So if a McDonald's is in an area, it's, a good indicator that, number one, there's enough of a population to support McDonald's or passing trade. But when I was buying development blocks, back in the early days, I used to do a lot of my deals in McDonald's. So we'd buy the big farm blocks and find the deals in McDonald's, and then the builders would come in after us. But if you see an area that's got a Bunnings, then it's highly likely that we've already got quite a few builders and developers already going in there, and the change is on for a particular area, so a good amount of population. And then this was the one that Scott added, actually, the Starbucks. If there's a Starbucks in an area, you'd have to say that it's already blown, it's already really active. Did you want to add any points to that?
Just that, of course, we don't actually like Starbucks coffee. We want good Aussie flat whites, but it is a lovely place to hang out, and it has good convenience. I notice those Starbucks in places as I travel around the country, popping up in the Cabooltures of the world, out in Marsden Park in Sydney. They just pop up in these interesting places, and the timing is exactly as you say. They've been through a large development phase, and now you've got a different class of people moving into the area, professionals and busy with money that want to get an $8 Frappuccino.
Yeah.
If they're $8, I guess.
Yeah. And also small business owners, because they're the ones that actually buy the franchise and set it up.
Yeah.
And the last point that I would like to make is, when you're choosing a regional area, remember it has to work for you. So you can choose a regional area because it's going to have really, really great cash flow, but you're not worried about capital growth. You're chasing the cash for your portfolio and you'll wait for capital growth. But there's other people that really, really need that capital growth, because if you go for capital growth, that will help you buy more property. So, like, different regions will have different features, and also remember you need to map out your choices that match your own goals. So, for example, if you do want to buy into a regional area because you do want to retire there, that's all right. Okay, once again, beware of misleading data, growth coming off a really low base, unsustainable blips, and false increases driven by hope, which is what I would say for sure sold Hobart and Launceston, and it's really what I say is going on in Townsville.
Yeah, that always is a warning flag for me is I'll see some announcement of a big, huge new resort by a foreign company, billion-dollar price tag attached to a market. And of course, it creates a frenzy often there. And often those things they're not real. They don't happen. So, when you see the big announcements, obviously follow them and make sure that they're at a point where the commitment is there. Even with the government as well, announcements of new hospitals can be delayed and they can be reduced in size. And sometimes it's better off to just wait. You may miss some early part of a gain in a market, but what you'll gain is the certainty of all that infrastructure happening. Depends on what your risk profile is and if you're a true speculator or not, I would say.
Yeah. Okay. All right. So, Scott, you're going to take us through. Do you want to set this up so we can explain what we're doing here?
Sure. So we took a crack at putting some markets down on the page here. We tried to lump them into 3 categories. Solid performers for us are just long established areas that maybe were smaller regional centers at one point, maybe 10 years ago. And we've just seen strong, consistent growth, population and employment, and they really have grown into their own centers. And really, they probably will continue to do well going forward as well.
Yeah.
We've tagged a second group of markets, which are warning flags for us that, I think both of us are probably avoiding. They may be blip markets, short-term bursts of growth, have other factors that, may cause us not to be that interested in them. And then we tried to tag a few up-and-comers, smaller regional markets that are really growing and show many factors that I think one of the two of us likes, at least here.
Yeah. So did you want to do a deep dive on them?
Yeah, I'll run through the solid performers here. So Sunshine Coast, we've been investing up there for over 10 years, with the new hospital that went into Britannia. You've got a population now over 417,000. I mean, geez, when we were going up there, I remember telling people it's 300,000 people up here and all this infrastructure is coming. It's really become its own city with new CBD and hospital and so many things happening in the market, but it's also a satellite city of Brisbane and really gives kind of investors a double play there.
Yeah.
Maitland and Newcastle, it's actually a lot of similarities there, especially with the Newcastle side and it being along the coast. Population there, over 500,000 people in those two markets. We're kind of cutting the Hunter Valley out of that, I think, to stay in just the more exclusive parts of regional New South Wales.
Yeah.
And Tweed Heads, which I think we both love, and just an amazing place to live up there. Very limited land supply, and it has boomed sort of just like the Gold Coast.
Yeah. And it is also expanding. They are opening up areas behind or further away from the coast, but there's so much demand and such good infrastructure, such a buzz about it. So, yeah.
Yeah, it really is. It's probably the one place of our two states where we've got cities on the other sides of the borders almost growing together into a region. And we saw that during COVID with the battle over the border wars, where we had people getting locked out of their own state because their school or job was on the other side of that dividing line.
Yeah, crazy. But, makes it interesting. Okay, so I'll just cover a little bit about the areas that we're avoiding. So really, Lismore for me, too dangerous because of all the flooding. Townsville and Gladstone, Scott and I have mentioned this earlier. I just think it's only like that. You will see data that says that at least Townsville is performing, but it's not sustainable. Like, who's driving that? It's really speculators and the people that are selling up and going. They've been waiting to go for a while. And I just don't see anything really that it makes that area attractive for me to buy. plenty of other places to buy. Gladstone, of course, is a worry because it's so tied to the mining, and it's actually been in the news recently that there's some more mining companies closing down there, so it's going to be tricky. And of course, I'm always have avoided all of Tasmania because it's an island and the population down there is really more towards the regional size. So, and it's not the right type of population. There's not enough babies being born there and not enough jobs and diversity. I mean, lovely place to visit.
Yeah.
But no. Okay.
I'll just add a little bit with some numbers because we do have some additional charts of data behind this, but we showed you 1 year population growth, but we've also had a look at 10 years of population growth in many of these markets. And when you actually go dig into the Townsvilles of the world or the Mackays and the Gladstones, what you're going to find is that over a 10-year period, the population has grown under 10%, under 1% a year over that time frame. So if there is a short-term burst going on now, for some employment opportunities, it does give you sort of at least that hesitation. You should realize there's been a period of very low growth in these markets over long periods of time. So be looking at that historical data, not just past 12 months, but what's happened on the trend lines, for these markets.
Yeah, good point. Okay, and so you want to talk about the up-and-comers?
Yeah, look, I think we've got Toowoomba. We'll just sort of walk through them and just remind people of their size. Toowoomba, 16th largest on our list here in Australia, about 150,000 people up there. I think Debra and I both like it for a variety of reasons. I mean, it has a lot of its own employment, has really grown into its own city. I see many new states popping up in those outer suburbs that are the octopus that Debra's talked about, with sort of different amounts of employment around them. The Inland Rail, a lot of infrastructure, and you can get to Brisbane in under 2 hours, right?
Yeah.
I've stuck Tamworth on the list, and this is a smaller market than typically we would go into. It's about 50,000 people up there. Just a well-diversified regional New South Wales market. It is inland. It's on the drive between Sydney and Brisbane. If you go inland, I just liked a lot of the things I've seen happen in that market over the past couple of years. They did upgrade their hospital a few years ago. They're actually building a university at Tamworth. You probably heard that on one of our recent podcasts. And just seeing a lot of families maybe leaving the Sydneys of the world to escape our high house prices and want to go to a regional center. And more we're starting to see that pop up on the list. It's also had a very good run in house price growth. I think Cotality had its growth rate at 12% in the past 12 months. So it's certainly showing some legs there.
Yeah.
You want to say anything about Geelong, Debra?
Not really.
Geelong has some similarities to the Sunshine Coast, in terms of its proximity to the coastline. It obviously has access to Melbourne, the capital city market. We all saw the Geelong Cats in that AFL final, so hopefully that tells you what sport they like down there. I've just seen a lot of people who are starting to take a really good look down there. It is an attractive market for people to move to from a jobs perspective. Shortage of rooming houses, we hear. So obviously there's a huge amount of demand from singles who are looking for lower cost housing. So certainly watching it with the Bellarine Peninsula, and Torquay is actually my favorite down there.
Yeah.
We put 2 Queensland markets on here, Bundaberg and Rockhampton. Rockhampton's the larger one with 82,000 people. Bundaberg, sorry, I don't have the number actually handy in front of me. It's right, I think it's in the 70s. So they're kind of in that not yet 100,000 people cities along the coast. Bundaberg has a new hospital that's coming. We did see that burst of growth on the Sunshine Coast when they announced a large new hospital. A lot of developers are developing along the coast. They're building new houses between $800,000 and $1 million. I get them pitched to me all day long. So we see a lot of that.
Yeah.
It's a market I think we're sort of monitoring just to see if it's going to pop up a bit.
Yeah.
Rockhampton, Debra?
Yeah, so I would vote for Rockhampton over Bundaberg because for me, Rockhampton has all of the good stuff. So nice diversity in jobs and industries, plus it services all of the farms. And it's just that little bit further tucked inside, a little bit further away from the coast. Yeah, and I just have more interest in that one than Bundaberg, but Scott likes Bundaberg, so we'll see who wins. Okay, so is that all we need to cover on this?
Yeah, I think so.
Okay, alrighty. So when you're considering any area, as usual, make sure you abide by these tips. So watch out for misleading data. Only use trusted sources, not something that someone has provided you. Just validate that if you're presented with data, because we see it so often. Always conduct the financial pros and cons for your own situation before you buy, and use criteria that's tailored to your requirements. So what's right for someone else might not be right for you. So you might really need an area that has really good capital growth. It's no point chasing something where you're going to get lots of cash, but where capital growth might not move for a long time. So just be careful about that. So Scott and I are both here to help. We both specialize in different areas, but both have the same client-centered mentality. You can find Scott on his Facebook page. Our details will be in the description box, so you can contact either of us. And from the Property Frontline side, for buyers who are trying to buy in the current market, you've got your finance approved. We're starting to see a lot of people just can't make it through to an actual purchase. We've developed a free video series that is designed to help you cut through the noise, see through the spin, and help you make confident decisions. So I will include details about that in the description box below. And so for next time, we will be covering off the 2026 market forecast. So this will be one of the first reviews for 2026. And Scott and I will get out our binoculars and really dig deep on the data. I'm sure there'll be a few arguments there.
Yeah, so, definitely. It's also certainly, it's a good report for everyone to buy as well. We're always very supportive of Lewis and his team over at SQM and appreciate the work that they do. Definitely one of the best house price forecasters out there, we believe.
Yes. And yeah, we will also look at what the banks are saying, but they've never been right. They usually wait until Lewis puts out his forecast and then they copy him. But anyway.
Exactly.
Thanks for visiting us again. Remember, if you would like to be notified of the next episode, make sure you subscribe, give a like. And if you want to chat to us, make sure you reach out. Anything else you'd like to say, Scott?
2 weeks to Halloween, so hopefully everybody's got their costume all picked out.
I know you love that. All right. Thanks very much.
Thanks,
Goodbye.
everyone. Goodbye.